Hey traders, welcome back to this week's weekly Forex forecast. Last week was a big week in the markets. We had a ton of days coming out. And last week we had what we would term as a reversal week. So what is a reversal week? Well, I'm kind of zoomed out here so I can show you, the market tends to move down, move down, move down, can move sideways for a bit. And then you get a week like this where you have abnormal momentum. So how are we defining abnormal momentum? Well, quantitatively, only 5% of the time you should be taking out these gold levels. So if you have a week where these gold levels are taken out, especially like last week with euro dollar, it did bounce in the end on non-farm payrolls after trading below its second weekly lower bound. However, what that tends to signify when you take out these gold levels in a given week is abnormal momentum and therefore new direction in trends. That tends to be what happens. So you get a reversal week, and then what will happen is the market will trend and trend in that direction for, it could be 1, 2, 3 months, could be longer. And then the market is kind of dipping down, buying up, and then you get a reversal week in the other direction. So the strategy that I employ and the process that I use gets paid mainly in non-reversal weeks. Why? Because most of the time you're not having reversal weeks. They come every kind of quarter or every couple of months. And so you get this big kind of volatility and then a new trend starts. So it does look like going into this week, based on what we saw last week, a new trend is developing euro dollar to the downside. That would imply a bigger bottom forming in the US dollar. And it looks like, at least for now, unless something significant changes and we get another catalyst to break this back to the upside, it looks like we are starting a third wave to the downside. So you can see we pulled back, we bounced, it's kind of deep, which is characteristic of a wave 2, because at this point, if this is a second wave and this is the first wave, there's a lot more people who are still buying dips. And so second waves tend to be quite deep because psychologically people are prepared to buy. Once you break the low, you fail to make the high over here and break the low, this is where you can get a real capitulation and momentum to the downside. So going into this week, I do now have a bearish bias on euro dollar on balance, and there's a really nice area setting up here that I'll be looking for potential shorts from in this market next week. So if we zoom in a little bit here, you can see the intersection of this kind of channel top here from the high and the potential second wave is right at, depending on how far we trend sideways, it's right at the weekly upper bound next week. So what I'm going to be looking for preferably next week is, and when we go through the portfolio selection, you'll see US dollar longs are now on my list, top of my watch list going into next week for opportunities. So I'm looking to buy dollars next week based on, what we've seen last week and the quantitative changes. So any kind of pullback in euro dollar, I'm going to be looking for a breach of the 1.17179. When we do that, we turn overbought during a week in a market I'm looking to be short. So essentially now we have this potential trend change. I'm looking to sell rips instead of buying dips like we've pretty much been looking at all the way since back when we had the EU fiscal catalyst, right? That's what caused that reversal week to the upside. The EU announcing it was going to unleash military spending in Germany. They were going to throw off the fiscal shackles and start to spend, which is inflationary. So bond yields went up, and as yields went up in the EU, this dragged the euro higher. We saw that big explosive reversal week to the upside. Then euro dollar trended for a couple of months, and now we've got a reversal week with catalyst to the downside. So I'm going from buying dips to selling rips in euro dollar, and above the 1.17179 is where we enter the sell zone. So the sell zone is between these two levels and the buy zone is between these two levels. But because, and many of you, who follow the channel on a regular basis will know this, but because I'm only looking to be short, the buy zone is just profit taking, right? If I short euro dollar somewhere in here and it enters the buy zone, I can buy back my position for a profit, but I cannot open an initial long position from here. I can only open short positions next week from the sell zone. So this is what I'm going to be looking for next week. A third test, many of you know, kind of third test of channels also can be quite explosive, either to the downside or the long side. So a third test of the upper channel here, once we turn overbought above the 1.17179, is where I'll be looking for a potential setup next week in real time with GMT members. Okay, so moving on to the portfolio selection, there's a couple of things to pay attention to here. So we do have the pound and the New Zealand dollar as the number 1 and number 2 shorts. Those are, pretty standout obvious in my opinion. And to be honest, the third best short that I'll be looking at next week, I think is also quite clear, which is the Aussie. Because the Japanese yen has bottomed quantitatively, and the euro and the Swiss franc, although they've kind of topped quantitatively, and that's another sign, we are looking at a bigger kind of top or reversal in the euro, and the dollar's actually overtaken it. So that quantitatively starts to look like a third wave breakout, right? When we look at the quantitative data here with the euro dipping below the US dollar, then really that just leaves the Aussie as the third best short. So to the long side, I like the Canadian dollar. I also like the US dollar. And the third one out of these three, you could potentially look at the Japanese yen, because we've also seen, and we're not looking at it here, but HedgeDash users who have access to the indices as well, we've also seen for the first time the VIX bottoming in the indices score cards, in the performance metrics here. That implies we're about to see a resurgence in volatility, which is negative for the US stock market. And as we start to see stocks selling off, you tend to catch a bid in the safe haven currencies. And so shorting Japanese yen going into next week is probably not a great policy. And on top of that, you could make the case, to buy the yen. So, short pound yen, perhaps short New Zealand yen, short Aussie yen, I would consider. However, I still think on balance, the Swiss franc, which is also a safe haven currency alongside the yen and the dollar, makes the most sense. And, even though we've kind of peaked in the Swiss franc and we're moving down quantitatively, it is still absolutely, in absolute terms, the highest performer. So on that basis, I'm also going to be looking at Swiss franc longs, and those are the 6 currencies to the long side and the short side that are at the top of my watch list going into next week for opportunities. So in today's video, then we're going to look at pound CAD to the downside, New Zealand CAD to the downside, Aussie CAD to the downside. We're going to look at pound dollar to the downside, New Zealand dollar to the downside, Aussie dollar to the downside. And we're also going to look at pound franc to the downside, New Zealand franc to the downside, and Aussie franc to the downside. Okay, so kicking off the watch list, as always, with crude oil. Now, crude oil was highlighted last week in last week's weekly Forex Forecast video for a potential short above these prior highs and above the weekly upper bound. It pushed above the weekly upper bound, above the prior highs, and we had a really nice reversal to the downside. Did I trade it? I did not trade it last week. I don't know why. Maybe it was in the overnight session or at a different time, but I didn't pull the trigger on it either way. So there was a really good short opportunity here, highlighting last week's video. I was kind of looking at it throughout the week, but again, for whatever reason, I can't remember. I decided not to pull the trigger on it, or I didn't have the opportunity to. But I am looking for exactly the same thing once again this week. So if we can push up in crude oil above the 71.10, this is where I'm going to begin to look at this last week in the 4 hours. We push up, we flag, we push up, and there's your kind of double top. So I'd like to see this push into the 71.10, into the sell zone, just as it did last week before selling off. And what I'd be looking for is the same thing again. I'm going to be looking for reversal patterns, going to be looking for a failure to break out to the upside, and I'm going to be looking for that 1 or 2 day liquidation back inside the range, which we often get with these markets once we trade above or below the first weekly upper and lower bounds. So that's what I'm going to be looking at in crude oil next week. If we blast all the way through and take out the 74.95, this is where we turn extremely overbought during the week. It's not expected to happen. Again, if it does happen, very much like euro dollar last week, it implies a potential trend change because it's abnormal momentum. We're not supposed to get here most of the time. When we do, it means it's abnormal volatility. And that usually precedes, a bigger trend reversal. But once you push above these levels, just as we did last week from the weekly upper bound in crude oil, the same applies to the second upper bound, like we saw with euro dollar. Broke below the lower bound, and then we get the catalyst, and it pushes back above. So even if it breaks above here, you would still expect for a few days a short-term pause and a sell-off. So these are the two levels, the 71.10 that I'm going to be looking to short from. If we end up at the 74.95, although it's not expected, it is the second place I can pull the trigger on a short in crude oil next week if I wish. Okay, so kicking off the Forex universe with the pound pairs. Now, something to note with the pound pairs going into next week is we do have the Bank of England on Thursday. So most of the time, the vast majority of the time, when you have an interest rate decision, these markets do nothing into the interest rate decision. Wasn't the case last week. We actually started to move on Monday in the euro, and we continued, really into FOMC last week. We saw volatility. So that was one of those occasions where we started to actually move in euro dollar before FOMC, but most of the time, and when we're trading, we have to trade probabilities, right? There's no 100% in trading, so we have to trade the thing that happens more often than not. And usually when you have interest rate decisions, you'll see the market not doing too much. So because it's out on a Thursday, I really want to be in and out of the pound pairs if possible by Thursday, and just, come look at them again next week. So what I'd like to see is I'd like to see pound CAD pushing higher. So if we can muster up some strength in the pound before Thursday's Bank of England meeting, I'm going to be looking for this to turn overbought during the week, which is above the 1.84537. And the 1.84798 is the key area of resistance from the past, which drove price lower, that I'm going to be focused on for a potential failed breakout. So I'm going to be looking for buyers to push this through. And now you've got a couple of things. You've got a weak market. You've got a market which is now overbought during the week, which is limiting its upside for the remainder of the week. And you're trading into a key area of resistance all before an interest rate decision on Thursday, right? So if that happens, if that setup materializes, I will take the other side of that. I will be looking for a short. And these are the setups that I do in real time with GMT members every single week. If they work or they don't work, members get the details and the results of all of these, and we keep tabs on them and update the statistics every Monday. But these are the setups that I'm going to be looking for next week. So I'm going to be looking for a failed breakout, just as we saw crude oil break above its upper bound and then reverse for a couple of days. That's the kind of 1 or 2 day liquidation I'm going to be looking for next week in pound CAD. The extremely overbought level, the gold level, is at the 1.86008. That is the second place I can pull the trigger on a short if I so wish. And the third thing you can look for, but I would look for only after Thursday. If you get a negative outcome for the pound on Thursday on the Bank of England meeting, let's say it just crisscrosses and does nothing into that meeting, you can look for the breakout below the moving average, and then that first kind of bear flag setup, which very often you get the momentum on the event, it pulls back, and then you get a follow through down to the profit taking zone, the 1.81595. But I can only short pound CAD next week. I cannot buy this market under any circumstances. Next is pound dollar. Now I can either short this market or do nothing next week. Buying this market is not an option for me, and you can see we've pushed down and we've traded into the bottom of the channel. So we're starting to channel between the high and the potential wave 2. That's how wave 3s also develop, and they channel and they become extended. So if that's what's materializing, I only want to be short in this market. Now, the place that I would really like to look for a short next week is the 1.34389. It's this resistance area in the sell zone. So I want to see pound dollar bouncing from the bottom of the channel. I want to see it push into the sell zone next week, which is the primary thing I'm looking for. Everything else here is really just confluence with that. But once we turn overbought during the week, then we trade into this key area of resistance, the 1.34389. And, if we pull across a little bit during the week and then trade into it, we're also going to hit the top of this channel here. So this is the area. Primarily, it has to trade above the 1.34082 for me to start to look at it. Then I would like to see it trade into this high. And if it also trades into the top of the channel at the same time, that's going to be a place I'm going to be looking for a 1 or 2 day reversal back inside the range. And I'm going to be looking for a short opportunity in real time with members next week. If we blast through here and take out the second upper bound, again, it's not expected to happen. So I don't think that's going to happen, but it's worth having this level on your chart as a backup. And also, if you take this out, then again, you've probably got a trend change to the upside. So because we had this in a number of the dollar pairs, in this case, the downside last week, you don't tend to test, second lower bounds to the downside and then second lower bounds to the upside the following week. Again, you tend to trend in that direction for a period of time, and then you take out the gold levels in the other direction and you start, a new trend. So I don't expect to take that out. This is what I'm looking at, but if we do take that out, I can pull the trigger on a short again if I so wish, or an initial position, and we'd be looking at that as a potential trend change to the upside. So those are two things I'm really looking for. In fact, I'm not really looking for this. Again, this is more of a backup. This is what I'm looking for next week, this setup right here. And like the other pound pairs, you know, if it just kind of chops around into Thursday and does nothing, then you can look for the breakdown on the Bank of England on Thursday itself, and that's short into the channel bottom, and also the quantitative profit target here at the 1.31396. And the final pound pair we're going to look at is pound franc. Now this pushed into the sell zone last week, right in this area. And I'm pretty sure this was covered in last week's weekly Forex forecast video, the 1.07783. Look at the failed breakout. So we turned overbought during the week in a market I'm looking to be short. And I did actually sell this. I didn't quite get my timing off on this, but I did actually short this. I wasn't able to capitalize on it, unfortunately. But I shorted it, pulled my position, wasn't able to get back in. But this is the high. Look at this failed breakout. This is exactly what we're looking for. And again, the timing is the difficult part, right? Timing this stuff is where, you know, we make our money. That's the difficult part. But the breakout, the failed breakout, and the reversal, that is exactly what we're looking for. So when I point to this level, and you can see as a range top multiple times now, once, almost there, twice over here. If we push up again, you know, we're kind of entering into this range. We push into the 1.07695. We turn overbought once again during the week, and I'm going to be looking for exactly the same thing. A failed breakout above the 1.07783. Treating this as a range, looking for that liquidation back inside the range, just as we saw last week. So that's what I'm primarily focused on next week in pound franc. The extremely overbought level is up at the 1.08668. So second place, I can look for a reversal if we take it out, but I don't expect that to happen. And the third thing, of course, would be if we just chop around, you know, and then we break down on the Bank of England and you look for that first bear flag opportunity after the event. In that case, you know, if you're trading Fibonacci, and you get a bearish outcome for the pound, that's the main thing, you get a bearish catalyst on the event itself, then you can look down to the 1.05752 as the profit-taking target next week in pound franc. Okay, so moving on to the New Zealand pairs, looking at New Zealand CAD first. This is a market that has kind of been chopping sideways, but with a slightly bearish tilt. And every time we pushed higher, I've been looking to short it. You can see there's a nice kind of range top almost forming here and here. We've also tested it multiple times in the past, but you can see this high right here at the 0.82580. This is where, once again, I'm going to be looking for New Zealand CAD to push into the sell zone, turn overbought during the week when it does that and crosses the 0.82338, and then trade into resistance at 0.82580. This is where I'm going to be looking for that 1 or 2 day liquidation back inside the range, back inside the range, back inside the range. So that's the primary setup I'm looking for. The extremely overbought level next week is the 0.83127, worth having on your chart. If we take it out, I can short this market again, or for the first time at a better price. And also that would do what? That would probably signal a trend change. So I don't expect that to happen. Markets aren't changing trend most of the time. So this is the primary setup I'm looking for. If we pull back and break above the moving average, and then we start to break down with momentum, you can look for that bear flag setup, but just bear in mind this market has been a bit choppy recently, so it's probably not the best one to look for in terms of breakout trading. But the profit taking zone to the downside for any intra-week shorts is the 0.8076. Next is New Zealand dollar. I can either be short or do nothing. Cannot buy this market next week. So what I want to see is I want to see the market pushing higher. Again, look at this kind of trend reversal. We've got this push down, failure to make a high, and then we sell off and make a new low. So now we are technically trending to the downside because we have multiple lows, or a lower low down here, and we have this lower high. So I can only short this market. What I want to see is I want to see it pull back. We don't have, once we cross into the sell zone, which is above the 0.59913 next week, we don't have a prior high really until up here. It's quite deep. Usually I'm looking for resistance areas kind of in the first half of the range here, this kind of first half of the sell zone. So the point at which I see is actually a prior low. So I prefer prior highs, which push price down in the past, but prior lows are also okay. So essentially this would be a stair step. We break through this low with momentum and we'd be pulling back to retest the underside of broken support turning resistance. So I like prior resistance being resistance, but you can also have broken support, of course, being resistance as well. So if we trade into the buy zone and test the 0.60013, this is where I'm going to be looking for a rejection and for a liquidation back inside the range next week. If we blast all the way through and take out the 0.60664, this is, sorry, 0.60644, this is where we turn extremely overbought. And again, you know that quantitatively, you'd have to look at that and say this is a channel breakout. So I don't expect that to happen because we've just had this to the downside last week. But the 0.60644, keep that level on your chart. It's worth having on your chart because that's where we turn extremely overbought if we got there for whatever reason. You need a catalyst normally. Like last week, we had the catalyst for dollar strength. We would need that kind of catalyst in order to hit that level. So I don't see that happening. And of course, as always, the third and final thing is you can look for the fast market. So it breaks above the moving average, doesn't quite get to its upper bound, and then it re-breaks. And that sets up a bear flag opportunity. Down to the bottom of the channel and the profit taking zone next week to the downside, 0.5845. Next is New Zealand franc. Again, I can either short this or do nothing. And this is very much like New Zealand CAD. So it's kind of bearish, but it's also kind of moving sideways. So when you've got a kind of bearish market, but it's moving sideways, essentially every time it hits the range high, I'm looking to sell it, because if it does break, it's probably going to break this way. So if you step in and try and buy it down here, you know, you could catch the next leg down. Whereas if we've got the momentum to the downside and this is corrective, then it should be choppy. Every time it pushes up, should sell off, should find a rejection. So I'd like to see this come back again, very much like last week. Look at this sell-off to the downside. I'd like to see this trade above the 0.48146, where we rejected previously here. And again, above these two highs, this is where I'd be looking for a failed breakout. So essentially, it's like a corrective move, right, that does this. So look how many trades you can get in there potentially. Breaks above, short it. Breaks above, short it. Breaks above, short it. Breaks above, you know, short it. And then one of them can actually go. And you can capture the bigger move down if you're holding for that period of time. So that's the primary setup I'm going to be looking for, a liquidation for 1 or 2 days back inside the range if we can trade into the sell zone above the 0.4815 and into these prior highs here and here. If we start to pull back, you know, and we break above the moving average, we attempt to get there but then fail, you know, the moving average kind of goes sideways, you get the re-break. You can look for the bear flag setup down to the profit taking zone at 0.4694. In fact, you can see we've already broken down below the moving average now. So you may actually just pull back and get that bear flag set up straight out the gate next week. But preferably, I'm going to be looking for this setup primarily next week in New Zealand franc. Okay, so wrapping up the Forex universe with the Aussie pairs before we move on to gold and silver. I'd like to see Aussie CAD breaking above its moving average next week and enter the sell zone. So I can only be short Aussie CAD next week, cannot buy it under any circumstances. The 0.89987 is where we turn overbought during the week, and there's a really nice high here and here. So we trade straight into prior resistance where price got pushed lower. I'm going to be looking for a sell-off for 1 or 2 days. We've seen it here, here, here. Every time it pushes up, I'm looking to sell rips for a 1 or 2 day liquidation. If we end up above, although I don't expect this to happen, but if we end up above the 0.9084, probably means there's been a trend change, but for a few days I can look for that 1 or 2 day reversal as well. And the third and final thing is we break above the moving average, but instead of taking out the upper bound, we re-break, and you can look for that bear flag setup into the profit taking zone next week at the 0.88279. Next is Aussie dollar. Now, really interesting setup in Aussie dollar next week because you can see, unlike, you know, euro dollar, where it looks like we're already starting that third wave, Aussie dollar looks to only be starting a first wave. So what that means is if we can pull back in Aussie dollar next week, I'm going to be looking for a short above the 0.65555, especially if we can break above here and trade into this resistance area at 0.65869. This would be a great place to look for a short next week. And yes, I would be looking for 1 or 2 day liquidation. But if you capture the right shoulder and you time this next week, we get a pullback and you time this right shoulder, this is probably the start of a third wave down because of everything we've looked at. The break below the low here would be the head and shoulders breakout. And of course, you know, any kind of head and shoulders breakout is a 1, 2, tends to be a third, you know, if you're in that direction. So in the direction of the overall trend. So if we are about to break into a third wave in Aussie dollar as well, then any kind of pullback does give the opportunity for a second wave. What does that mean? Well, second wave trades, if you can capture the end of a second wave going into a third wave, that's where you can hold on to trades fundamentally for, you know, a couple of months. Because yes, you can get that 1 or 2 day liquidation, but if this turns into a third wave and you break this low, the third wave is where you tend to see the bigger moves. So if that's going to transpire for the next, say, 2-3 months, then any trade capturing the second wave or the top of the second wave before and as it rolls over into the third wave, and the third wave is confirmed below the end of the first wave, then that's something you could hold on to for actually a longer period of time than 1 or 2 days. So something to look out for. You only get those opportunities usually a handful of times a year, and that's the primary thing I'm going to be focused on next week. If we pull back and we start to break above the moving average, we fail to get there, and then we get the re-break, you can look for the bear flag setup. In this case, near term down to the profit taking target, the 0.63929. And the place we turn extremely overbought next week is above the 0.66367. I don't expect this level to be taken out. If it does, look at the prior high. This turns into a new trend to the upside. So again, don't expect that to happen because we had that kind of reversal last week, but keep the 0.66367 on your chart anyway, just to be aware of it, if for whatever reason market was to get there, but highly, highly unlikely it does. So is there going to be an opportunity to capture a potential third wave and hold this fundamentally for a couple of months next week? I'll be definitely keeping my eye out for it, that's for sure. And the final Aussie pair we're going to look at before we move on to gold and silver is Aussie franc. I can either be short or do nothing with this market at all next week. I cannot buy it. And the point which I'm looking at in the sell zone next week is the 0.52855, this high over here. I'll be looking for a breakout, attempted breakout above this high. And if we start to see that price action, I'm going to be looking for that to fail. Going to be looking for that 1 or 2 day liquidation back inside the range. It's quite choppy here, so I'd probably leave the intra-week breakout stuff. Maybe it pulls back to the moving average like this, and then that becomes the bear flag to the downside. But when it's really choppy like this, and you're in this kind of consolidation, this can go on for a period of time. So I would much prefer to short any kind of rip into overbought territory in Aussie franc than look for the intra-week breakout. The 0.53299 is where we turn extremely overbought. Don't expect it to get there, but as always, worth having this level on your chart just in case something unexpected happens. Okay, so wrapping up the video with gold and silver as always. And gold, as I've been highlighting in the last few weekly Forex forecast videos, is in a range. So when a market's in a range, we can sell resistance and buy support. If a market is strong, really just looking to buy support. And if a market is weak, I'm really just looking to sell resistance. But when a market is neutral or moving sideways or ranging or range bound, then you can short resistance and buy support. So what I'd like to see here is I'd like to see one of two things. Again, I'm looking at gold purely reactively. I'm not trying to predict which way gold is going to go. I'm just looking at it reactively, looking for setups. Really, when we go through the markets here every Saturday, I'm outlining a plan and I'm waiting for setups to materialize. I'm not really trying to necessarily predict the direction specifically in a market. I'm really waiting for setups that we're looking at in advance to materialize, and then I'm jumping on those setups. And of course, I'm sharing those setups with you in the videos that we do every weekend. So what I'd like to see is I'd like to see gold push into the upper bound, turn overbought during the week in the sell zone, and attempt to break out above the 3434.46. If we get that, I'm going to be looking for a potential short for 1 or 2 days from the range high. And if gold is to trade down below into the buy zone at the 3290.74, and we trade into the bottom of the range at 3249.71, I am still once again looking for a potential opportunity to buy the bottom of the range for a 1 or 2 day liquidation. I would not bother intra-week trading gold, personally speaking, next week. And last but not least, we have silver. Now, silver did sell off last week as it looks like we're getting that bottom in the dollar. So you could make the case for silver pushing up, for a potential short, but it's a little bit early for that. I mean, the short above the 38.79 is probably on the table, but I still prefer, on balance, even with a stronger dollar, I do still prefer long opportunities only in silver. So what I'd like to see is, you can see there's no real support level unless we get down kind of halfway into the buy zone. So I'd like to see it enter the buy zone, and I will be looking for a re-break back above the 35.44. This is where I'll be looking for that liquidation back inside the range next week for a 1 or 2 day reversal. You could potentially look for the intra-week breakout. If we break back above the moving average follows it, and look for that move into the profit taking target at 38.79. I would just be a bit wary about intra-week trading silver when we have a stronger dollar. You know, intra-week trading or breakout trading silver when you've got a weaker dollar is a better policy. We're now starting to quantitatively see the dollar outperform, and it's something I'd rather be long. So I'm happy to buy silver on the dip below 35.23, but intra-week, you know, if that's your thing and you want to look for it, you can. The profit taking target is 38.79. I personally would leave the intra-week stuff in silver next week. And of course, the extremely oversold level is the 33.46. Don't expect it to get there, but it's worth having on your chart just so you know the parameters and the volatility parameters of this asset next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.